$1 trillion. Sounds like a quote from an Austin Powers movie, but it's not. It's actually the amount of money being managed on the Juniper Square platform. And today, you're going to be hearing from Brandon Sedloff, Juniper Square's Vice President of Sales and Managing Director. Adam Gower here, and welcome to the Gower Crowd podcast, syndication in the digital age. Now, as you probably know, here at Gower Crowd, we build digital marketing platforms for real estate sponsors who want to raise money online. There are a mass of resources about that at gowercrowd.com, but what we don't do is handle the money once a prospect has converted to being an investor and has wired funds. That is the realm of folk like Juniper Square. Now, there are two phases to raising real estate capital. The first phase is in finding prospects and nurturing them so that they become active investors. That locate and nurture phase is what we do here at Gower Crowd. It is driven by content marketing, education, and implementation of proven digital marketing systems like auto-responding email systems, auto-posting to social media, and at its core, massive content production with the minimum of effort. All things we do here for our private clients. Now, once someone invests, they move into a different bucket in phase two. What we do is largely educational. What Juniper Square does in phase two is securely store legal documents, calculate distributions to investors, provide investors with an investment dashboard so they can see how their investments are performing, etc. And as I am frequently asked by clients about what I call the back-end portal work that they need once someone invests, I figured that it was about time to find out more about Juniper Square and to share that with you today. For a more detailed look at what phase one looks like and to learn how to find prospects and convert them into being investors, go to the podcast page for today's episode at gowercrowd.com and sign up for the whiteboard workshop where I walk you through the whole system. It is a free on-demand webcast, and the process of getting into the webcast is similar to the way that you can capture lead names and then start the process of nurturing them to become investors with you by providing something of high value to start off with. So go ahead and try it, right? That's the whiteboard workshop at gowercrowd.com and see what a lead generation system looks like. So now for phase two. What happens when someone comes to know, like, and trust you enough to send you a check? Well, you install a button on your website and Juniper Square takes over. Here's Brandon Sedloff, Vice President of Sales and Managing Director, to tell you all about that. Brandon, thanks so much for being on my podcast today. Really good to meet you and to find out more about Juniper Square. And I'm going to kick off with we've been chatting for a few minutes, but I'll kick off with probably the broadest possible question. Tell me, and I want to contextualize this in the real estate syndication industry, what does Juniper Square do?
Yeah, thanks, Adam. First off, it's great to be with you, and thanks to all of your listeners. Juniper Square is a all-in-one investment management software that was built to streamline fundraising and ultimately help improve the timeliness and the accuracy of investor reporting. And that enables investors and managers to have real-time access to data to help investment managers scale their business. There's a few different components to our software as you think about kind of what the scope of this is. There's a CRM, or a client relationship management tool, to help investment managers better manage capital relationships. There's tools that help automate parts of the fundraising process that obviously helps investment managers to raise more capital with less work, something I know you know a lot about. There's investor reporting capabilities that produce customized statements, transaction notices, and reports that can be shared with investors. And then there's partnership accounting, which really is designed to replace spreadsheets and automate a lot of the back office work that investment managers have to do, especially groups that syndicate with high numbers of investors. And then lastly, we think of ourselves as kind of the digital extension of the manager's brand. So we are the portal through which investors access information about their investments with a manager.
All right, so actually, let me ask you this. This actually comes up quite a lot. What is a kind of critical mass for a sponsor, for a developer to have in terms of the number of investors that makes it worthwhile working with somebody like you on the back end? Do you figure?
Yeah, it really depends. We have customers that have who are just getting started, who have only a handful of investors. Maybe it's the partners in the firm or a handful of friends and family. They do it on the side and they realize there's something special here and they think they can do it at scale. All the way through, we have customers that have over 5,000 investor positions or more. And so, the way to think about it is really twofold. Investment managers have a decision. You can get away with using spreadsheets to a certain level, but typically what we find is that the market today, the investors are demanding more transparency, more accessibility, and investor portals are becoming the norm. And so we actually see a lot of smaller managers starting to adopt this category of software and adopt Juniper Square well before they have the real need from a friction perspective. So, I would say if you've got 10 or more investors, you would get significant benefit out of a software like Juniper Square.
Right, now you're using this term investor portal. And funnily enough, I had somebody reached out to me yesterday who was talking about building an investor portal. And in fact, talking about working with Juniper Square. And I had to clarify what they meant about that, because this is what you and I chatted about a little bit before we started. What we do here at Gower Crowd is we create this digital presence online that establishes a relationship with a prospect and encourages them, or in fact predisposes them to invest. Mm-hmm. But at the point of investment, we don't handle any of the money. We don't handle any of the transactional stuff. That's what you do. So what is an investor portal? Just help me understand, or help our listeners to understand how you define that term.
Yeah, you're absolutely right. There's a lot of different ways to describe an investor portal, and it can get very confusing. But our definition of investor portal is really clear. It's a place where you can go to securely access information about your investment, right? So oftentimes, many groups, if they're just getting started, they don't even have an investor portal. You ask them how they communicate with their investors, they say, we send emails. Right. Well, we all know that emails are not really the most secure way to send highly confidential information. And there's lots of limitations in terms of what you can share, how you can share it, et cetera. And so the industry is moving to secure cloud-based portals. And the most important thing to think about a portal is you can go license Dropbox or Box.com, and that's a great place to stick documents, right? Many of you are in Google Drive, et cetera. But the thing that the industry is looking for when we talk about an investor portal is they're looking for a place to go and not only access the information about their investment, but to get the context behind their investment. So think about if you log on to your Charles Schwab or your Fidelity account and you look at how your public equity investments are performing. You don't go on and say, let me click through and find my underlying documents. Maybe you do once a year when it's tax season, but generally you don't go to the document area and try to read through every line. You want to see, is my portfolio up today or down today? And which parts of my portfolio are up and which parts are down? And then why? It's that context that is really important to an investor, because as many of your listeners and your customers would know, investors care a lot about understanding how their investment is doing. It builds trust, it builds credibility, and to be able to share that information securely is really, really important, especially in this day and age.
Interesting. All right. So investor portal, this is the perspective is through the eyes of the investor. So the portal is the way that the investor understands how their investments are doing with an individual sponsor that they've made with an individual sponsor. And I know it's probably a slightly daft question, but I'm going to ask it anyway, because they say there's no such thing as a stupid question. I'm going to prove everybody wrong right now. But if somebody invests with multiple sponsors who all use the Juniper Square platform, can they see those consolidated on one dashboard?
Yeah, it's a great question. I think there's two parts of the answer. So we have so the short answer is today, if you are a syndicator, the answer is no. So as an investor, you would need to log into several different portals in order to access your performance for each manager. But there is a broader trend in the industry where there's this consolidation where large investors, think of institutional investors like public pension plans and sovereign wealth funds, they increasingly are demanding kind of one place to see all of their investments, because not only do they want to access the information, but they want to be able to compare and contrast investment by investment. So technically speaking, this isn't a technical challenge. This is more of a market maturation challenge, where we're seeing the institutional side of the market mature a little bit in advance of the non-institutional side. The other reason why the institutional side is matured a bit faster is because if you are a pension plan and you have several billion US dollars to allocate to real estate, you're doing that across dozens and dozens of investment managers. Whereas if you're an individual or even a sophisticated family office, you probably don't have that level of exposure in terms of the volume or the quantity. But it's a great question, and the industry is definitely moving in that direction.
So now, of course, as we sit here, I'm like totally stimulated with millions of questions that I want to ask, and I don't know which to ask first. But I'll tell you what, I'm going to ask you this one, which pushes everything else down the line or down the list. And that is quick question. Just answer this one quickly, and then I've got a follow-up question to it. When was Juniper Square formed?
We were started in 2014.
Fantastic. So Juniper Square was formed post-Jobs Act.
Correct.
Right, of 2012. So you are as old as crowdfunding, right, as real estate crowdfunding. And you've been there for a while, haven't you, Brandon? You've been at Juniper Square for much of that time. So let me ask this, what trends have you seen in terms of growth, not just for Juniper Square, but for the industry in general, for commercial real estate sponsors, adopting these kinds of technologies? And we'll get to digital marketing in a minute. What trends have you seen over your time at Juniper Square? And then also let's talk a little about what trends you've started to see during COVID, because we've got 6 months of that history as well, haven't we?
Mm-hmm. Yes, a lot of trends. So, my background is in real estate. I joined Juniper Square in 2016 as the first commercial-facing sales business development hire when there was 4 or 5 of us at the company at that time. So, I've seen a lot in terms of Juniper Square, and I can speak to that in terms of how our product has matured and developed. But in terms of industry trends, there's a few broad ones that we've seen. The first is this increasing. When you think about the power and the dynamics between an investor and investment manager, over the years, that power has shifted back and forth. The pendulum of power has shifted back and forth from investor to manager to investor to manager. And where we are right now, and one of the reasons what we're doing is so important is because it's the investor today that has the power in the relationship. That doesn't mean the investment manager is powerless, but the power is shifted to the investor. The investor, if you are a high net worth investor and you want to invest in real estate, you have options. There's lots of different groups that are very good at what they do who syndicate deals. And so the way that you can start to weed out the groups that you want to invest with from those that you don't is to look at performance. And the way that you look at performance is you look at it in a consistent kind of apples to apples manner. And when you do that, one big trend that you see is that it's really hard for your typical GP to not only produce a track record, but to actually know what their performance is. And so this push for more transparency and more accurate and timely reporting from the investor is a major trend that we've seen since we started the company, and we continue to see even in this COVID environment, because anytime there's a crisis, what do people want to know? They want information. Even if it's my investments aren't doing so well, that is 10 times better than saying nothing.
And silence.
Exactly. Silence is the worst. Silence is the worst, right? So this is one major trend that we've seen.
That's really interesting. So let's kind of drill down on that a little bit. When you talk about, in fact, I'm going to paraphrase because I can't quote you. I can't remember exactly what you said, but you implied that sponsors don't really know what their track record is. Let's just extract that a little bit. The way that it would have been done in the past is based on memory and in person. You would communicate to somebody, you know what your deals did, you might write them down. If you were going to meet with an investor, new prospect for the first time, you'd certainly have a pitch lined up, right? I mean, you've got a story. In fact, everybody puts together deal memos that explain their track record. So tell me more about what you mean. What is that distinction that you're making between not really knowing what your track record is and what you can do now with somebody like Juniper Square?
Yeah, I mean, I think if you think about kind of the dynamics that are going on, the commercial real estate sponsors are realizing that data is foundational to their business. This is a major new shift. Back in the day, it was relationships. Today, it's data. That data is very powerful. And so whether that data is used for getting, a global view or a national or regional view of their investors, their investments, or even how those two things relate, it is no longer possible to manage all that data on spreadsheets. So in the pre-Juniper Square world, the way that a sponsor would do this or a manager would do this is all the data would live in spreadsheets. And so it's really hard because you might have a tab for contributions and a tab for distributions and a tab for performance, and it might be over 5 or 10 assets and across different accounts. And it gets really complicated. So if you're meeting with Bob and Susie, who are high net worth investors of yours who have been in 4 or 5 deals, it could take hours at best, days or weeks at worst, to produce a consolidated view of Bob and Susie's exposure for them. So you can tell them that, how much capital, what percent, what your returns have been, what the IRR is, how much capital they've put in, how much capital they've gotten back, et cetera. So, and as you said, investors are demanding more transparency and access to the data from their deal sponsor, from their manager. And the big trend is it's not surprising because they already have access to this type of information for other public equity investments, as we talked about, like if you go into your Charles Schwab or your Fidelity account. So this is the transparency and accessibility that Juniper Square helps to enable for the investors and the investment managers.
All right. So now let me ask you this. So what you're talking about is a transition from manual, from what I call analog to digital. Right? You're talking about the migration from manually gathering that data to automatically assembling it and using tech to do that. So as a salesperson who spends his life talking to developers who are old crones like me, most of them, I've got no doubt who have got no idea how to use the simplest of technologies, which maybe is even their phone, not that those are simple. What are the biggest challenges that you have in selling this idea to sponsors? Because it's probably very similar to my challenge, selling digital marketing to sponsors as well. What are the challenges you come across?
Well, first off, I think you have to give yourself far more credit. Here we are hosting a podcast, and you were telling me earlier about your new high-speed internet. So you are ahead of the curve. So give credit where credit is due. I think the real estate industry has been slow to adopt technology. I think we all realize that. And up until very recently, whether you think this is version 2.0, 4.0, or 10.0 on kind of tech and real estate, up until recently, there was no real catalyst or no real impetus for change. Well, the good news is, real estate is catching up with the rest of the world, and adoption is happening. And it's happening at a rate that is still behind other sectors, but at a much faster rate than it's happened in the past. So part of this is just like the systemic challenges that exist in our industry, especially for developers, as many of your listeners will appreciate. Businesses were built by kicking the tires, walking the dirt, shaking hands, back of napkin analysis, trusted relationships. Well, the reality is all of those things still exist. But now you have this new thing, data, which is really powerful. And it turns out that it can be a competitive advantage if you can use it, or it can be a competitive disadvantage if you don't use it. So the biggest challenge that we have to get people to change, obviously doing nothing is a number one reason you don't buy software. It's status quo is okay. But it's really ensuring that our customer, our prospect at the time, understands that we are the best at what we do, the same way that we understand that they are the best at what they do. So I would never go to a developer and suggest that we can be a better developer or do better site selection or get better entitlements than they can. And they also can get benefit and satisfaction from understanding that we are a software company, and we've been doing this longer than any other software company, hyper-focused on this space. And so it's that same trust, it's that same relationship, it's that same partnership that is really important to make sure that we instill in each one of our customers, because ultimately, people don't like doing things that they know very little about. And there is a massive information asymmetry. We know 100 times more about software than our customers do. So at some point, what we really encourage our customers to do is not necessarily underwrite the technology because they don't know how. They have to underwrite the company, they have to underwrite the team, and they have to underwrite the outcomes. And the best way to do that is not by talking to a salesperson. Yes, you have to learn from myself and my team, and I would argue we have the most honest, genuine, qualified team in the business, but you also need to talk to your peers. And so we have over 800 customers and over $1 trillion of real estate being managed on our software today. So the best way for a developer to see if they can get comfortable with software is talk to other developers who are using that software.
And then you presumably when you are selling to somebody who is curious, right, but unsold, you talk about what's the value proposition that you propose? Like, just think you've got 30 seconds before you lose somebody.
Sure, depends. We can help you do more with less, right? So move the employees that you have up the value chain in terms of the type of work they're doing. You can improve your investor experience. You can reduce your risk of making a mistake, either through cyber or through accounting. And ultimately, you could focus on the things that you're really good at, which is developing real estate, investing in real estate, managing real estate, and let somebody else focus on all the things you're not good at, which is accounting, reporting, investor communications, because that's not your primary business. What
you just said is the exact same as my value proposition. Actually, it's exactly the same. It's this understanding that what normally takes when it comes to meeting a prospect or a new investor and actually navigating them through the relationship, something that takes multiple meetings of senior people to educate and develop that relationship, you can basically automate, use tech, use digital marketing, use content to develop that relationship all the way through, so that when you do have that first contact is a high quality contact. You're not telling them about what you did 20 years ago, right? That relationship has already been developed. So your entire team, it's very interesting that you say that, is elevated to a higher level implementation of their skills. They're not dealing with the minutia as much, right, as they were before. So what do you see kind of moving to this marketing and the way that sponsors communicate? What have you seen? If you've got 800 customers, $1 trillion on your platform, heck of a number. What do you see are characteristics of best in industry sponsors in terms of the way they communicate?
Yeah, often and frequently. Those are the two things. Groups that communicate often and frequently with their investors and have and don't discriminate based on the size of their investors are the ones that tend to outperform the market. Because when it comes down to it, everybody knows performance is going to go up and performance is going to go down. It's all about understanding how your investment is performing.
Okay, so what do you mean when often? I think you said often and frequently, right? Yeah. To communicate often and frequently.
Yep.
So what does that mean? Just describe, what does that communication look like?
So to use your terminology, in an analog world where we're offline, in order to get communication out to dozens of investors or hundreds of investors, you need an army of people. You need to gather information. You need to merge information. You got to take it from spreadsheets into different tools for marketing. You know this as a digital marketer. There's a lot of work involved. And so what ends up happening when you don't have tools that enable you to be successful is you tend not to do it because it takes time and it's hard. You're not good at it. People like to do things that they're good at. So what do? They choose to communicate less frequently with their investors because producing the communication in and of itself is hard. How do you know who to share an investor report with? Well, you might have one investor, seems pretty simple, but that investor might have a spouse, might have a lawyer, might have an accountant, might have a child and a stepchild, all of whom need access to information. It becomes really hard. So people tend to say, well, guess what we're going to do? That's too hard. So we're just going to communicate as minimally as possible. Well, that's gone. That no longer works. So the best sponsors are the ones who adopt in tools and solutions, whether it's Juniper Square or others, that allow them to have this frequent communication with a low frictional cost. It doesn't need to be a lot of work to send a note out to several hundred investors or several hundred prospects about what's going on. And so how do you do that? You do that, as you know, through a narrative. Having a digital strategy is really important to our customers because it's all about their brand. It's all about their identity. So for example, one thing that we've done inside of our application is created the ability for developers and others to share videos, because developers have assets that start with holes in the ground and they exist like that for a long time, not really sexy until the project starts coming out. But how cool is it to have a drone video or a time-lapse video of how that development is evolving and to be able to show that to your investors so then they're not calling you every day saying, hey, Adam, what's going on with 111 West Main? It's been a hole in the ground forever, but instead they can look at it and see how things are going. The ability to have high-res photos in the data room and in the portal that you can share with your investors. So instead of saying, hey, Adam, can you send me a screenshot of your rehab that you just did on this multifamily complex? You can go in and see the beautiful multifamily complex with the new paving and the new facade and the new awnings and the updated pool. That's really important to managers because context matters.
So that's fascinating. Context matters, and so does content, right? And I mean, that's how you communicate, really, is you taking these nuggets of information that you're sharing. And what we do is we do that in that kind of relationship development stage. And what you're describing is that post-investment relationship maintenance and enhancement stage as well, right? If somebody's actually put money in, they want to be hearing from you.
Yeah.
So turning this round a little bit to understand about, and I know you did confess not to being the digital marketing expert over there, but I want to ask you anyway, because you obviously work very closely with that side. What aspects of Juniper Square's marketing benefits you the most? What do you find really enhances your ability to sell the product to sponsors?
Yeah. And I don't know if this is the answer you're looking for, Adam, or what answer you're looking for. So I would love to flip the question back on you because I think
Sure.
I have a lot I can learn. But at the end of the day, I use a kind of a simple heuristic, which I've conveniently put into a real estate term, which is PPP. And real estate PPPs, often public-private partnerships. In my world, it's peers, plan, and performance, right? And so it is the number one thing that we can do, and I touched on this earlier, is we create case studies on our customers, which are available on our public website that talks about their experience pre-Juniper, with Juniper, and how that impacts. So it's about the impact. So you do something, that's great, but what is the impact of that? So it talks about the impact of utilizing Juniper Square. That is 10 times more valuable than anything else that we can do.
And how do you find, or how much do you find new prospects that you talk to of sponsors consume that before they talk to you?
I would say somewhere between 60 and 70% of our customers at Juniper Square, so 800 plus, have been a referral from somebody else or somebody in the industry.
They've been a referral. So, but what I'm asking is, how much do they, when you talk to a sponsor for the first time, how many times is that communication completely cold? I asked you a daft question to start with. I said, what does Juniper Square do? Knowing full well what you did, obviously. But how many times do you meet somebody who knows nothing about Juniper Square and expects you to sell to them? And what I'm getting at here, Brandon, is this idea that they've consumed a lot of information that you've already provided. They've already been advanced through the sales process. That's what I'm
right. Yeah, no, you're spot on. They've already been advanced. So it's very rare that we get on the phone and they have no clue what we do. They've never heard of us and we have to convince them, simply because two reasons. One is there's so much information available on the internet, whether it's on our website, it's on software review websites, it's on LinkedIn. There's a lot of information. So buyers come ready to make a buying decision, as you know. So content matters. The content on the website, the content that we use in our marketing matters a lot. And we at Juniper Square like to channel the voice of our customer because nobody really cares about the software for the software's sake. They care about the software in terms of how it's going to make them better at their job.
Let me ask you this. Have you noticed this, the relationship between the extent to which a sponsor developer, and I know this isn't really your business, but I'm interested to know, you talk to a lot of people, those that are more effective raising money online, who consequently, presumably, are more active once they subscribe to Juniper Square, and the relationship between that and their digital marketing presence,
Yeah.
basically, to the extent to which they work relationships online.
Yeah, I think you're right. I mean, this isn't my area of expertise, but anecdotally, I do observe many of our customers who have the most advanced digital presence are finding deals more frequently at a faster volume, acquiring investors at a higher velocity. And so, similar to groups that are adopting technology, using technology in terms of a strategy to acquire new investors is something that the vast majority of our customers are very interested in, and the most sophisticated ones already do. Absolutely.
Yeah, that's interesting. Okay, so when somebody calls you for the first time and says, Brandon, I'm interested in Juniper Square, presumably you research them, right? I mean, you go out, you look at their website, you look at their LinkedIn profile, you might check Twitter. I don't know what your preferences are. Tell me what you see in that. That might be where you can make this connection. Do you find that people, when you go to somebody's website, they've got a great education section, they're doing great social media, et cetera, are they an easier sell for you, for the platform?
Yeah, it's interesting. I mean, the folks who have invested in their website, I don't know if they're an easier sell, but what it tells us is that they clearly care about their brand. They clearly care about their image. They clearly care about how they're perceived, because, it's very easy. If you go to 3 websites, you've got, really nice, clean, marketing friendly websites, and you have others that have no information. And so it's much easier to work with a group who has an abundance of information available, because it helps us get to know them more quickly so that we can focus on the thing that matters most for them. So it ends up saving them time, it ends up saving us time, and it comes out as a win-win. And so, as you know, because this is your job, not everybody has websites with the right types of information or the right context on it. So, it's really great when I can understand an investment manager, what sectors they invest in, what territories they invest in, what their performance has been over time, if they're willing to share it. It's also great to see pictures of their assets. It's good to understand the composition of their team. Is it a small team or a big team? Are they specialized or not specialized? Where did the team work? What's the pedigree before? These are all things that are really helpful, that help us understand, is this a qualified opportunity or is it not a qualified opportunity?
Yeah, it's really interesting that you describe it that way, because you also described exactly the investor experience, didn't you? Basically, right? Right? That's exactly what investors
need: access to information. Why would you invest with somebody? Investors wonder why they would invest with somebody if they don't have access and they don't understand who they're investing with.
Exactly. I mean, that's the whole point, isn't it? That you've got to, that's how you communicate. This is exactly what we're talking about. It's this idea of communication. If you've got a website that is nothing more than just a glorified business card, now you've got to go through this whole process of just talking to the sponsor to find out what they do. Heaven forbid, right? Why would you want to do that these days? You want to, right?
I talk to institutional investors all the time, big public pension plans, and the number one thing they say is, I don't want to have to talk to the manager at first. I do want to talk to them. I need to get to know them. But the first thing I want to do is see the data. Show me the data. Show me the track record. I will create my own interpretation of that, and then I'll decide if I want to invest. And so if you make it easy to get people the information that they need to evaluate you, you're likely to have a higher hit rate, because they already have what they need, and you're only going to talk to the people who are interested in moving forward.
Well, not just to invest, but even to have the opportunity to talk to somebody, right? An investor looking on a website will decide in seconds flat whether they want to go any further, right? And once they look at you and there's nothing there, there's a good chance they'll never come back unless you really work at it. So you want to have something there. So you talked about when we started chatting, and we'll give it another few minutes, and then we'll wrap up with 3 questions. But one of the things that you were talking about was the ability of investment managers to scale their business and the tools to raise more capital. So we talked about that in the context of Juniper Square, but tell me a little more about scaling and this idea of going from 20, 30, 50 investors to 500 or 5,000 investors.
Yeah, I mean, I think it's a very interesting question, and it's, the journey is unique for every single investment manager, but a few things happen. Number one, if you think about the sheer volume of investors, you have more people that you need to communicate with on a more frequent interval. And so the demands on your time increase. And so what we typically see is people hit these different kind of natural breaking points in terms of investor thresholds. Let's say it's 50 investors is the first one, maybe 100, 150 investors is the next, and so on and so forth. And you hit this decision-making point where you either need to hire more people to handle the investor inquiries and to service the investors, because those are now your customers, or you need to deploy something that helps you do it at scale, like software. So that's the number one thing that we see as people move on this journey from few investors to many investors. And it's a little bit counterintuitive, maybe not for you, but for some of your listeners. I think it was UPS or FedEx is the example I'm thinking of, where when they decided that they were going to share tracking information with the consumer, you order a package, it ships from Nebraska and you live in LA. And instead of going from Nebraska to LA, it might go Nebraska to New York to Atlanta to LA. Everybody thought that they were crazy, and they thought that the number of inquiries on the phone to the call centers were going to go up because people want to know where their package is and when it's going to arrive. Well, it turns out the exact opposite happened. The number of inquiries went down because what people care about is not where their package is. People care about when their package will arrive, and having real-time access to understand, is their package on track to get to them on the date it was promised or not, is what investors want. And so one of the things that we see with some of our most sophisticated managers is as they grow, they start sharing more and more information about their investments online. They share asset level information, property level information, performance information. The more information you can share, the better, because the one way to combat a huge increase in the number of investors is give them what they want, access to this information. So instead of having hundreds of phone calls, send them to the website, to the portal, and suggest that they log on. And that answers probably 80 to 90% of the inquiries. And what that means is when you're the deal sponsor, the GP, you have more time to talk to your investors to build relationships versus answer simple questions like, what is the NOI of XYZ asset, for example.
And this whole process is automated. Once you get the content, we still got to create the content and upload it and set it in place. But once it's there, it's automated. The communication then follows is automated. I mean, that's the point with marketing.
Yeah.
Once you tell your story, digitize it and get it out there on your websites and on social media, you don't have to do that again, right? It's like it's totally automated. That's what you're talking about with your institutional investors. They want to go through that to decide whether or not they're even going to talk to you, right? If you've not got it, it's harder to make the decision to even talk to you.
That's right.
So let me ask you this. We also talked about trends. And what I wanted to ask was what you've seen in the last 6 months. I don't think we really touched on that. Have you seen an increase with remote working increasing and awareness of automation, digital automation and tech increasing? Have you noticed an increase in demand for Juniper Square and for digital services? Or what have you seen in terms of trends, I should ask?
Yeah, I mean, COVID has been a significant driver of technology adoption. We're all, we're all living in a remote distributed world now. And so it's accelerated the need for industry-specific technology like Juniper Square. We've brought on, I think, something like more than 80 new clients since the start of COVID, which was in March, just to give you some perspective. So we feel very fortunate that, we're in an industry that can help our colleagues in kind of real estate, private equity, and real estate investing solve this problem. But COVID has absolutely been a major driver. And one of the things it's done is it's taken this from a fairly, let's just say this is a medium to low priority, and it's made it the top priority because now you have teams working out of systems in different places. We got to get everybody on the same system so that when your investor calls or your investor logs in, they get the actual information. So that's been really interesting for us to see. And we actually see, from an industry perspective, we see capital raising accelerate. So a lot of folks are having a lot of success right now in terms of raising capital. And I'm sure, I'd be curious to know, Adam, what you guys are seeing in your business, because this is an interesting trend. And I think what it shows is a flight to quality in a time of distress like we're in right now.
Yeah, I think there's a few things going on. One is there's like say, a flight to quality, like flight to stability, and predictability is very important.
Yeah.
But also there is a lot of pent up demand for opportunistic investments as well, which is where a lot of the money is backing up, I think, at the moment, right? Yeah. Particularly. All right, so I'll tell you what, let's wrap up if you don't mind. I could definitely talk to you for a lot longer, but I know you've got a hard stop. So let's wrap up. I've got 3 sign-off questions, just quick questions that I ask all of my guests.
Sure.
And they are as follows, if you don't mind, Brandon.
No problem.
So typically we talk about syndicating online, but let me ask you, for somebody who is thinking about increasing their use of tech in commercial real estate, either back-end dealing with investor relations or in terms of digital marketing, whatever it happens to be, they have nothing at the moment. What would be the most important thing they should keep in mind as they make their decision to move forwards?
The most important thing to keep in mind, I think, is understanding what the problem you're trying to solve is. People get merged. They don't understand what the problem is. So isolating the problem and staying laser focused on that is number 1. And then number 2 is, unless you love early stage technology and are a secret technologist, you need to adopt a technology that's been proven by the market so that you don't need to spend your time figuring out the kinks in software, and you let somebody else who's proven with a track record do it for you, so they can do what they're best at as a software technology company. You can do what you're best at as the real estate company, in your case, on the capital side.
Yeah, I love that, because actually nothing that I do is new. Actually, it's been done before. And basically, every other industry has been disrupted by tech, right? By digital marketing, every other industry. So we're just grabbing the best practices from that and applying it. So don't worry, it's been done before. Right, Brandon, second of 3 last questions. What's been I'd like to ask, because my focus is on online behavior and business development, etc., marketing. So what's been the hardest lesson you have personally learned online?
Interesting. Tone doesn't come through online, right? So context matters a lot. So I think it's very easy to think you are saying something and conveying a certain message, but have that message land on deaf ears. And so having expertise, having specialization, having support in this area is really, really helpful. So that when we are communicating, and I am communicating, everything is delivered with the right tone, the right content, with the right context.
That's interesting you say that. So you're talking about having somebody help with communication to make sure that communication is spot on each time?
Mm-hmm.
Really? That's interesting, because actually I figure if I screw up and get it wrong, as long as it's not egregious, I can just delete it. If I put a post up, I'll just delete it. Yeah. And the other thing is, actually, just to jump in here, what surprises me most is sometimes I'll put something out reluctantly, just thinking, I need to get something out, I'll get it out now. And oftentimes it's that has I get the greatest positive reactions from it. I don't know, I try not to double guess myself. Yeah,
just to be clear, when I think about tone, I think about just kind of more broadly, how do you convey information to a group? How do you get the right context? I think that the counterpoint to that is exactly what you said, and it's what I employ in my own personal kind of social identity, is it's just authenticity. Nobody edits or reads that. It's got typos. It's whatever I think, whatever I feel, because you need to have a social presence. You need to be authentic. You need to be your true self, because that's what people believe. Nobody wants a talking head, but you also have to realize that everybody's going to interpret that differently. And so that's why it's really important to have a well-rounded kind of social profile and a social presence. I don't think we live it, to me, and for my team and our organization, it's critically important to be socially minded as it relates to social media, because in order to attract the widest audience and convey the message, you need lots of tentacles, and there's different ways to communicate. It's not always buttoned up. Sometimes it's just who you are, what's on your mind. And, I'm very fortunate in having a great network of people on LinkedIn to follow. That's kind of my primary medium. And I also always appreciate when people tell me they enjoy the content that I curate for them. That means a lot to me because it's something that is interesting to me, but also knowing that it's meaningful to others is a great validation.
Fascinating. Yes. I love the idea. This authenticity is key, isn't it? It's just absolutely cool. Last question, and then we'll sign off. And then I've got a couple of offline questions for you. But
Sure.
Key daily habits. Brandon, what are your key daily habits to be successful online? You talked about LinkedIn, etc., social posting. What do you do that keeps you sane and successful online?
Online. Well, offline, it's exercise. That's an easy one. Online, I think it's consistency is key, right? You need to have a high, you need to be communicating frequently with your audience, and you need diversity of communication. So if I'm just sharing, everything about Juniper Square every day, that's not interesting. Nobody's going to read that. So you need to be broad, more so than super deep as it relates to your online. And then there's a high degree of reciprocity. So every time I go online to do something, I try to like and comment on other people's posts, because we all know there's algorithms, and the way these sites work is it bumps up the most relevant content. And so I want to help the people that help me, and I want to help the people who I appreciate what they're doing online, because I consume a lot of really excellent information and find awesome resources that way. So to me, that's kind of the number one thing that I do from a professional standpoint online.
Brandon Sedloff, let me get your title right. Vice President of Sales and Managing Director at Juniper Square. Is that correct?
That is correct.
What a pleasure to have you today. Thanks so much for being on my show.
Thank you, Adam. Great to be here. Thanks for having me.
That was Brandon Sedloff, Juniper Square Vice President of Sales and Managing Director. So now you know. 2 phases to raising capital. 1, the meet and greet phase, that long and laborious process of finding new investors and then establishing a relationship with them. And then once they invest, the process of providing a secure place for them to check on their investments and for you to manage their capital and related documentation and distributions. To find out more details of what the phase 1 looks like and to learn how to find prospects and to convert them into being investors, go to the podcast page for today's episode at gowercrowd.com and sign up for the whiteboard workshop, where I walk you through the whole system. It's a free on-demand webcast, and the process of getting into it and to actually seeing it is similar to the way that you can capture lead names and email addresses and then to start the process of nurturing your prospects online to becoming investors with you by providing something of value to start things off, right? So go ahead, try that out. Whiteboard workshop at gowercrowd.com. That's it, and thanks for listening. And thank you, Brandon Sedloff, Juniper Square Vice President, Sales and Managing Director, for your time with me today. That's all for this episode. I'll see you next time, and in the meantime, stay well. And for now, this is Dr. Adam Gower, signing off.